Master the Fibonacci retracement tool like a pro. Welcome back to my channel, guys. Sam Marvelous checking in. Today, I want to bring to your attention, guys, a topic on Fibonacci. Obviously, I'll just get down to what is important. There is obviously some guy, Fibonacci, what, that came with this concept, but I appreciate it. I love it. I have seen many people on the social media space calling themselves, for example, marvelous, and they put a Fibonacci at the end. It means there's some truth. And I've picked up from, or I've learned from somebody that saying there is some Fibonacci sequence to everything in life. And I think, yes, it could be true to an extent, obviously, right? You guys know by now, I trade a chart like this. Oh, I'm trying to put, yes, like that. These are called period separators. They help me identify or see um, times in relation to price. That this is a monthly chart, this is a daily chart, this is 24 hours, this is, you name it. So I trade a chart like these guys. And for me, it's so simple. If you don't know how to do this, or if you don't know how to navigate through the tools here on the MT5 or MT4 platform, my very first video to the channel, I was talking about this platform, guys. So make sure you go back to the first video about the MT4, understand it like the back of your hand, and it will make life easy for you guys. So, without wasting time, I want to plot the Fibonacci retracement tool on my charts. Do you guys notice there is obviously this point, which is the 0, 0 level. There's obviously this point, the 100% retracement level, and the middle point, the 50% retracement levels. Again, for the record, guys, there's, I think, three ways that I actually understand the fib or how I use the fib differently. And I think I'll share the other two in my upcoming videos because obviously in one video it becomes confusing and you might not even understand. So I'll call this the basic visual presentation to mastering the Fibonacci retracement tool. However, trust me, there's a lot of things that I do with the Fibonacci, man. I'm so curious. Those who know me will attest to this, and I want to share just with you guys the basic stuff. So these numbers, what do they mean for you guys? It means basically that when price moves from this 100% level, it's going to stop right at 72 or at least give you some reaction on it. But if it breaks to stop at 61.8, then it should react at least maybe to this point. But as long as it doesn't break this, chances are high that when it climbs, when it moves up from this 78.2, it's going to fly, it's going to rally all the way to the 50%. And in most cases, people might want to see what happens on the 50% retracement level because that's the middle point. It could either drop from there to go down, or sometimes that's not even the case. It can blow through that and stop right at 38.2. But when it does that, it would come back. It might drop as far as 61.8, but ultimately, if it moves from there, price would always reach a higher that's higher than the previous high. And you guys don't be confused with this. This is typical movement of price. So you can actually utilize, like you remember on my last video on candlesticks, I spoke about candlesticks forming at certain points of interest to validate their importance. I think you'd have a good winning strategy if you can base your approach or your signals of entry, exits, even on the Fibonacci. All right. I'm not saying you can only trade the Fibonacci, but trust me, the Fib doesn't lie. It just needs you to have patience. So how do I utilize it? I think you guys have understand how the structure of how it moves, and obviously how you can use this or utilize this to your advantage. Now, it comes down to one thing, guys. It can be used on big time frames like the 1 hour, sorry, 1 month, 1 week, daily. What are you basically doing? You are using, remember, we say in Forex, we look to the left for us to be right. Are you guys agreeing so far? If that is the case, then I need these vertical lines, which I call the period separators. So I want to project next year or next day from the low and the high that I got from this week. Remember, each day by each day builds on a day before. The same thing applied to Fibonacci. The next day builds from the previous day. Like you see in this case, guys, I'm going to mark the lowest. So obviously, when you plot the Fibonacci, you start from, you take it there. You see, draw Fibonacci retracement. You go to the lowest point. Then you mark it from there to the highest. Let me mention this, guys. Fibonacci retracement is typical or is almost the same with your support and resistance for that matter. Now, I'm on a monthly chart. Sometimes I've seen people go from monthly chart to weekly chart, then they move from there to daily chart. Sometimes they move to the 4 hour chart. They see something on the 4 hour chart, maybe a head and shoulder pattern. They want to see the same on the 1 hour chart. They want to make sense of what I saw on the daily chart should be also seen on the 4 hour chart. I have seen many times not working for me. I think it breeds more confusion than a clarity, in your analysis. Now, listen up. I'm going obviously to take, for instance, this is a daily chart. So I know already from my time here at the bottom that this was December. So this is January. Let me put another shade from January, right? All the way to the current month, which is the month of October. And this is my January. Now, notice how price closed somewhere around 23.6. And I know for a fact that there's a closest, because it's a matter of looking where you are and see the levels that might be hidden to a lot of people, but there's a certain level that's crucial. So in this case, when the price up closed, we can see we were closer to 23.6 and 00 level, which is the highest of last year. And like I said, this is typical support and resistance. It also means when price is between 50 and 80, 50 and 61.8, like in this case, we are in a range. But this range are big time ranges. In a 1 hour chart, 15-minute chart, these are really big moves. But overall, on a big time frame, you are just but in a range. Now, we closed somewhere around there, right? And you guys can see we are just getting in the range of 23.6 and 00 level. If we found every reason that this market should buy, like in this case, you might take your diagonal support and you notice the sellers have been dominant, like we see here again, but here we saw them, but they are short-lived. The market found some form of support, and you guys notice how this, obviously, yes, this candle See where it's formed. See where the wick is touching on. And this one reversing and closing above 23.6. This candle right there. It came to this diagonal resistance and drops a little bit back, but never closed below this. And then the markets are above. Where are they poised to go? Where are they potentially heading to? Obviously, the next level of the Fibonacci. So you might take profits there, or you might take your entries again there, not anywhere on the charts. So the importance of this tool is to help you on entries, stop losses, whether you are using this on a 5-minute chart. I'm just starting from the big time frame because I understand how different we can be as traders. Some are scalpers, some are day traders, some are swing long-term traders. So you just have to accommodate everybody. However, the same understanding, the same use of the trend Fibonacci, you can use this on 5-minute chart, right? Now, you guys have seen how I explained as I was studying the video. From this point, we're supposed to go there. We might retrace, but when you come back again, we will hit the next target, right? Now, before I go any further, I want you guys to notice how the arrangement of candlesticks is on this highest point, which is also like the resistance. The last price of the highest price of last year is also the 0 level of the Fibonacci. Notice how I'm even seeing the highest of January right there in price retraced. And right there, price came back, stopped for 2 days or so, and finally break and give me a retest. See how that candlestick? Remember, it's not about every candlestick, it's where they are printed, which is the level of interest and the candlestick pattern. In this case, what do we guys see? A pin bar. So much rejection. Let me expand. So much rejection and a lot of buy pressure. And we see some buys. Some 200 people move right there, guys. Right there. I don't know if the red color is not too much colorful. I will remove it. Now, back to business. See that? A nice break and retest and then a rally. But we came back again. We couldn't close below this. Obviously, on the weekly chart, we didn't close below. This acted now as a support. It's like a support and resistance flip. What used to be the support, so in this case, the resistance, which is here, what used to be a resistance, oh, what used to be a resistance, like here, it's now acting as a support there. So in some cases, people will call this support and resistance flip, and it's evident on the Fibonacci retracement tool, which means if you took your trade from here, you were targeting this, and you caught for yourself 600 pips in the month of January. That's insane, guys. Wow. Wow. And then going forward, you know where you are from the big time frame, the daily, the monthly, the weekly. You are in sync with where the markets are going. Then if you go back to the 5-minute charts, 15-minute chart, you are boss. You know. If you know, you know. Then all the way beginning of the year until I think mid of the year, 7th month, on the 7th again, the market started to reverse, to reverse, to reverse. Obviously, I told you that I've got another way to mark with my Fibonacci. I won't say it all in one video, guys. Let me look at this one in particular. Then next time we can expand. But see, it came there. It used. This is the point that it bought from. Right? Remember here. And we need to see, does it have that does it show any signs of slowing down? In this case, no. There's a full body breaking below the highest point. And once you know already, once it breaks this, and the beginning of this, the clue that is not retracing anytime soon to be a buy, you see them on small time frames, and you can see the markets once they are below the 0 level, we are poised to go to the next target, the 23.6, and we hit right there. That's where price retraced from. And when price gets there, guys, you wouldn't be looking to buy, sell a lot because you know where you are. Would you sell? Would you look for more of sellers here without any clue or signal? You can't be, you can't be, you have to buy low and obviously sell high. You can't be selling here. See where I'm marking here? You're selling, you can't be buying here. You are buying the hues. Just like you can't be selling here. You are selling in the valley. It's like this is a typical example of someone who goes to a grocery shop and found that maybe a box of soap costed $200, 5 cents, and they're a shop owner. They wanted to buy in bulk. They couldn't buy in bulk when it was, they wanted to buy to stock in their shop. Would you buy at such a high price when you know the normal price is something like 170, which is the price is below here? You are always looking to buy more higher, a lower price. You cannot stock in bulk at a high price. So there you look to sell, right? Buy high, buy low, sell high. And you guys, I just wanted to bring your attention to how price and how the candlesticks are reacting on those key levels of interest according to the Fibonacci. Now, let's move down to maybe 4-hour charts. And now we're not looking at the highest and the lowest of last year. No, we are simply going to take this example and I would mark from where? The lowest to the highest. And I want to use that in this column, right? First things first, observe, guys. Just observe how price or how candlesticks are forming or are reacting to these Fibonacci retracement levels. I hope you guys are seeing what I'm also seeing. And it is also important to note that this is a candlestick of interest, the one I've pointed, where because it's sitting right at the optimum price level, which is the 50% retracement, and it's bullish engulfing this one. And it overlaps this level of 38.2, it overlaps this one again, which means when price moves away from this 23.6 level, it's supposed to get to the highest, which is the 0.00 level. And from there, because if you look to the left, we have seen so much sellers from this same point, which means we can expect also to see some sellers. But to which level? We need to see if the price closes below this 23.6, that can validate maybe sellers coming more in more numbers. But no, that is countered. We see a full body breaking above that level that sellers previously dominated here, which means it's a clue that the buyers are present. On a scale of 10, how much is buyers here against the sellers? You can see there's a little to no, a very little body rejection, which means it's rejected just, it's just 9 out of 10 or 8 out of 10 buying dominance. And from there, the market just rallied. So you can build a solid approach just by understanding the Fibonacci retracement tool. And once you do that, like let's look at the last example of the week, which is here. I'll mark from the lowest to the highest. Now, it's your job to then go to the 30-minute chart and you want to understand the whole week. how it happened, how it played out. Now, notice, guys, I just want you to observe, first of all, the arrangement. Obviously, I'm counting 1, 2, 3, 4, 5, which is from here. This was my Monday. Price dipped onto this 78.2 and dropped back. You guys can see that. And this didn't actually go down or follow through with the sellers, but price have to come back again to where they started to drop from and give me a small retracement, which is something like this. I'm talking about this. Should I use think a brighter color? I think I will use red. It could be better. Something like this. Then price a small reaction. From there, if you buy this breakout, where would you stop? Right there. And if you see, you expect some reaction, of which we saw that, and the next target, if it breaks, is that point, the 50 level. And you see, the 50 is a very crucial, is the middle point between 0 and 100. We can expect anything to happen, either continuation or whether downside. And if we talk about continuation, you see the market breaks here from below, came to retest almost on the 50 and drops below like that. But when we see that it didn't follow through with this sell, the markets reversed and closed above 61, 250. Obviously, when it gets to 50, you guys can see a small reaction to the downside. But there was NFP last Friday, first Friday of the week, or 4 October was the first Friday, around 2 p.m. The markets rallied, and you'd have killed NFP just by the understanding of how the Fibonacci works. Are you guys with me? And you can use the high and lowest point of last week to see Monday, Tuesday, Wednesday, Thursday, Friday. Why? Because you are using the 4-hour chart. You are using the whole of last week to make sense of this whole week. It's the only difference comes when you go to previous day. Obviously, when I'm on the 1-hour chart, if every candle is 1 hour, it's 60 minutes. So from this column, this vertical line, that's a day, 60 minutes. Sorry, 24 hours, 24 candles. If you take your crosshair and mark it from this point, and you extend it there, what number do you guys see? From the beginning of the column to the end of the column, 24. That number represents candlesticks. The number in the middle represents pips. The number at the last number there, 184.9, that's the number we see here. That's the price, the quote price. And I spoke about this in my first video, guys. Right? So if I happen to be marking the lowest point of this day, it means I'm projecting the levels that can be of interest in the next day. So I want to leave you guys with a research, a homework to go and explore the Fibonacci retracement tool. And I hope when I share my contact details with you in future, we can always talk about these and how help you better master it and give you some tips and tricks on how to use them. If you made it this far, you are so special. I appreciate you. And don't forget to like, comment, and share this video with your trader friends. It will really help out with the YouTube algorithm. So this video is seen by a lot of traders. And let's build with your support. I hope we all do great things. Stay marvelous. Checking out.